How's it going, guys? It's Tristan back with another video. I know a lot of you probably haven't seen me upload in quite a long time, but I've decided to start kind of producing some content for the channel, especially while Dad Shark's away on vacation. And I really, as I've been kind of exploring a bunch of social media, other discords and such, I've really realized that people have pretty much zero idea why the market behaves in such a way that it does and how to take advantage of the market effectively. A lot of these patterns are quite easy once you have the experience to recognize, and ultimately um, allows the market to become very easy to predict. And that's a naive thing to say, and we don't make far out predictions based upon this structure, but shorter term, and I'm going to get into an example in a second here. It is a very viable thing to do. You can trade this market accurately, any market accurately, if you understand market psychology, proper risk management, and just overall the psychology and the way in which the common trader thinks and how to negate that, right? Um, for example, so something I talk a lot about with my mentees. If you didn't know, we have a mentorship program through our site where you uh, basically are given an hour with myself and an hour with Dad Shark per week, and along with our trade calls and such. But there's a very big difference between impulsive and corrective price action, right? So something like this, right? This is impulsive price action, what I just circled. And often, when we have a huge impulse in price, obviously we dropped about, I want to say about $2,000, $2,500 in a matter of a week and a half, 2 weeks. There's going to need to be some type of consolidation. Things don't just simply impulse down and go to zero, and things don't just impulse up and go to 20K, right? There needs to be corrections. Even when we look back at our 20K run up, you'll see, I mean, there were numerous corrections in this, right? And overall, the price action that we saw within this ascending channel, which was basically what I had been pinpointing in our Discord for quite a long time, this is all corrective price action. Price was consolidating within this channel on a sloping manner after a massive impulse down. That results in a continuation, right? So, how can we be able to identify this for the future? Well, another thing that was kind of pinpointing to us that this was bearish and this would break down was the fact that if we look, so within this ascending channel, which we speculated at the time would be a continuation pattern, right? So this would just be our consolidation. We also had this ascending wedge here, which basically results again in an impulse. This is a bearish structure. And when you're compressing in a bearish structure along a trend line, which we were doing here, as displayed with that wedge pattern, there's a very high probability that that will break down. And you're willing to backtest that. And even if you can also see that there was even an ascending channel here, that was just a smaller ascending channel within the larger ascending channel, which again, along the top of the channel has a very high probability of breaking down. So both those signals showed us that there was going to be a correction or another impulse to the downside, whether it be at the time down to the bottom of the channel at 6,900 or to continue that to the downside. And you can see, I mean, people that say this doesn't work, as soon as we break the structure right here, what do? Impulse straight down to the bottom of this ascending channel. We consolidate for a couple hours, and what do we do as soon as we break it? Impulse, right? That shows you that the market was reacting to the price action that was developing. That's what we're being shown with these patterns. That's with this structure. We're being shown what the market wants us to see, and if we take advantage of that, we can be profitable traders. Everyone at this point around 7,400 was calling long, right? And the problem with that was obviously, again, we were in a corrective price action ascending channel with compression along a trend line, as well as another pivotal thing that is a part of my strategy, is the divergence, right? So if you take a MACD and you turn off the MACD and the signal, which is useless, we don't need to look at crossovers, you're going to have something here, it's called the histogram. And with everything below this 0.00 mean, what that represents to us is negative selling pressure. So everything under this blue line is negative selling pressure. And everything above this is positive selling pressure, right? And what that represents to us is how powerful or how much pressure are the sellers or buyers putting onto the market to be able to move the price. And within that, the only reason I really look at this is to identify divergence. Now, there's multiple classes of divergence and such, which I don't have time to get into in the moment, but there's a very high probability, again, of forming a divergence for a macro trend reversal, which you can see this was their only negative momentum here. There's no divergence yet. Now, if we go look at, let's look at an example here. This would be bullish divergence, right? So if we look, let me do this and move this down. So within this, if we go back to this example I pinpointed, this is our first negative momentum, right? And it's funny because if we see, we formed a very similar structure there. We had a ascending channel of sorts that formed basically a consolidation, a dead cat bounce, a relief, allows for continuation. And then we got our positive cross, a very small positive cross, a second negative momentum, made a lower low on price, but a higher low on our histogram. This showed us that bears were tired, sellers were exhausted, and we would have a macro trend reversal. And we shot up to 10K. And that can be seen here. That can be seen here, if I pan it. That can be seen on our tops, right? I mean, this is evident, very, very, and it's very significant to us to be able to notify that and notice that. So we can see now, for example, let's say Bitcoin does come down to where I will get into my prediction, but the bottom of this wedge, this would allow the creation of a higher low on our negative momentum. And then if I take a trend line, right, what would we create? We'd create bullish divergence. This is class A, right? So that would be a bullish signal for a macro trend reversal in correspondence with our overall macro picture, which is basically this falling wedge. When a falling wedge is doing, it's compressing price. Again, just like we compressed price along the top of this trend line to break down, we're compressing price in a downtrend to break up. So price is getting super tight within this range, and it's like a pressure cooker. Eventually you need to break out of the range, right? Now it's impossible for us to predict, although it does become more likely that it'll break on the more touches you have. But it is impossible for us to predict if we come down here and bounce, if we'll reject here or continue to the upside. We cannot predict that, and it's way too early to predict that. Very naive to predict that. However, right, we can predict and we can make a conclusion that we should, based upon this structure, if we do even expand it, you can see the importance of it, right? You can even go all the way up to here. You can see how important this structure has been, right? Here as well. So we can make a conclusion that we should return to these price levels around 5K, 4.8, 5.2, depending on time it's descending, for some type of bounce. Now, how can we tell if we'll bounce at that level? Well, that's another part of my strategy, and the fact of the matter is, if we're going to bounce along that trend line, what you need to see, just like we saw a compression here, we need to see a compression again on a more small time frame, right? So we would be looking for, down to this trend line, what we would be looking for is either some type of descending channel of sorts, like that. Could be a lot bigger than that. I'm just drawing a sketch. Or some type of falling wedge pattern. Again, a smaller version where price is going to compress, or price is going to compress, and eventually when it hits this, this will give it the support, the bounce to be able to break out of the pattern and rally, right? If we just see a straight impulse down to the bottom of that channel, right? Or that wedge, sorry. If we see a straight impulse to the bottom of that wedge in the form of something, just say it just did this, or, came down like that, that would have a much more high likelihood of continuing to break this pattern, continue to the downside, because all we would do in that circumstance is flag out and continue to the downside, right? So that's what we need to watch out for, and that's what we need to observe in the coming weeks if we do choose to come to those levels, which I do strongly believe we will, at least for some type of temporary bounce, to the top of the wedge, or possibly out of the structure. Right, And you can even see here, I did post in the Discord and on my trading view that this was basically another just, redistribution. If you don't know what a redistribution is, it's basically just a bear flag, but a lot more goes into it, and again, too much to get into this video. But within, a market cycle, if you want to call this, 8400 a market cycle, not actually, but just a more miniature cycle per se. What you're going to see is an accumulation, and Wyckoff talks about this, a rally, a reaccumulation, right? And then a distribution. So this is where people are buying. This is your bottom. This is your top where people are selling institutional money, right? But the problem with that is when we have those tops and those bottoms, the retail money is doing the inverse of the institutional money. So they're buying the 8400 top. And that's because, 90% of traders lose money. It's the 90-90-90 rule, and 5% of after that. So 90 lose, 5% break even, 5% make money. So what the retail traders are there to do is give money and give liquidity for the institutional monies to institutional traders to make money, or institutions themselves to make money, right? That's our role. Unfortunately, that's the truth, and anyone that says something different doesn't know what they're talking about. So you can see after a distribution pattern, we get a redist, which would basically be what we had in that ascending channel, and then another mark down for your accumulation, right? So that would be technically a full market cycle within Wyckoff's logic. So, if we look at it one more time, what we have here, we have our drop. This would be our mark down. This would be our redist. This will be our mark down. And then we'll get our accumulation. This would be our dist. This would be accumulation, etc., etc., etc. So that's about it for me. I will be posting some updates on Discord, TradingView. I might even make some more videos, but I really want to get this out there because, I don't make a ton of videos, and I unfortunately haven't had a ton of time to do so. But I've really started to realize that people do not know what they're doing, and a lot of people are, unfortunately, stating that they do. And people that want to say, this, structures don't work, you need to use Fibonacci and Elliott waves, that's just incorrect. Myself, Dadcheck, we have two different strategies. They both are very similar in their overall underlying meaning, and they both give similar targets usually. And that's because they work, and good strategies will collude no matter if they're completely different in theory, right? So yeah, that's going to be about all from me. I hope that helped. Like I said, we probably, I don't think I actually mentioned this, we will see a bounce probably around the 5.8 to 6K level, if not here, for some type of retracement. But overall, we should be anticipating, unless something changes, which we can't predict, if something massive changes, but based upon the structure we have here, we should predict that the continuation to the downside will occur, and we will hit the bottom of this wedge before some type of reaction that we will be watching at that time. Anyway, I hope that helped for everyone, and I hope to see you guys in the Discord. Please like and subscribe, and I should be uploading some more videos, especially while Dad Shark's away for the coming days. And yeah, best of luck trading, and have a good one.